All right. We're just going to get a little bit of a transition here and get ready for our next panel. We're coming right up. Hope you guys are enjoying the last couple sessions here at the Future of Blockchain Summit on the exchange stage. And our next piece of programming is called Use Cases for Web3 in Banking and Finance with our moderator, Vasseh Ahmed. Please come to the stage and please introduce your guests when you get up here. I think we need a second microphone up here. Second mic. It's coming. It's coming.
Good afternoon.
Stage is yours.
Good afternoon, everyone. It's a pleasure to be here. I'm Vasseh. I'm the managing director, MENA for Enjinstarter. We're a Web3 launchpad and advisory firm. I'm currently in the process of getting regulated with VARA, so hopefully the first regulated launchpad coming out of the region. I want to invite my guest, Sagar from Fireblocks, for this fireside chat.
Thank you.
So we're primarily discussing use cases of Web3 in banking and finance. And before we start, why don't you tell us a little bit about what you're doing at Fireblocks and a little bit about the work that Fireblocks is doing in the region as well.
Thank you, and it's good to see you. We've known each other for a while, but we only met remotely, so it's good to see you face to face. My name is Sagar. I'm based in Singapore, and I lead Global Business Solutions and Advisory at Fireblocks. Fireblocks, for people who are not aware, we are a digital asset infrastructure provider. We provide a bunch of services with custody at the core, and on top of it, peripheral services like tokenization, payments, Web3, NFT, tech stack, and so on. I've been spending a lot of time in this part of the world. I was previously with Ripple in the early days of Ripple. And obviously, this region was very exciting for us back then, and it remains to be very exciting for Fireblocks. We already have 50+ customers in UAE only. We are seeing more and more customers coming in across the spectrum, from large banks to fintechs to crypto exchanges, large funds, and so on. So the journey is only getting started, and I'm looking forward to spending more time in this part of the world.
Wonderful. We hope to have you here more as well. So, I mean, my background is banking as well, and I remember when we were looking at a Web3 strategy, the first people we reached out to was Fireblocks, right, from an infrastructure perspective. So how do you see the level of sort of involvement and seriousness from the banks in this region right now to look at Web3 and, try to build on blockchain in a decentralized world?
It is super exciting for us. We start from banks, so literally, without naming names, we are talking to virtually every bank in the region. We have already publicly announced our partnership with Emirates and MIDI. We are doing a multi-year long innovation lab series with them, exploring multiple use cases across custody, tokenization, cross-border payments, and so on. We do expect to sign a few more partnerships in the very near future. Watch this space for more. But this remains a very exciting region for us, as I said earlier. Banks are looking at a bunch of use cases, and I think they're trying to mimic what's happening globally. The flavor of the season is custody. A bunch of banks and other institutions are looking at providing custody services to the exchanges and the crypto native players here. Payments, of course, UAE being a massive outbound remittance corridor, payments becomes a very interesting use case into other inbound corridors like Southeast Asia, India, potentially Africa, and so on. The third use case, which is coming up now in the region, but we're already seeing a lot of traction globally, is around tokenization. The low-hanging fruit there is tokenization of financial instruments, and more specifically, fixed income instruments, bonds to be precise. But in this part of the world, there's a lot of interest around tokenization of real-world assets. We are talking to large funds and large corporates who are looking at tokenization of real estate, infrastructure projects, farmlands, sports, you name it. And that becomes a very exciting thing for us. And then on the other hand, if you look at the other use case, which is tokenization of fiat. So we are talking to a bunch of banks globally who are very interested in launching their own tokenized money, either in form of stable coins or tokenized deposits. And then, of course, the central banks are looking at CBDCs. Now, if you combine the two, that creates a beautiful flywheel effect where you have tokenized money, you then do the settlements with other tokenized assets completely on chain, fully atomic, T plus zero, real time, and that is when you start seeing the real value add of blockchain and digital assets. So all in all, very exciting.
Amazing. So let's deep dive into the use cases a little bit more. And I know you and I have discussed tokenization for hours and hours, right? So I mean, even when we were running sort of financial analysis or research on why a financial institution really needs to adopt tokenization, right? And we, from a bank's perspective, started looking at it from loans, and we really figured out that we could actually reduce the cost of loans to a borrower by almost 50%, right? And that became one of our very favorite use cases to try and explore. I think it's about getting all the right stakeholders, in place to be able to sort of function in something like that. Another challenge that banks do really see is around identity, right? So every bank has to onboard their customers, go through a KYC, AML process. And this is not only costly, but there's also it's a very laborious task, and it takes a lot of time, and it requires a lot of, So the cost of onboarding customers becomes very, very high. So how do you see sort of Web3 or the decentralized world tackling digital identity? And is this something that banks and financial institutions will be able to adopt?
No, it's very interesting. But to be brutally honest with you, this is a very new space. I know there have been white papers written around decentralized IDs or on-chain IDs or self-sovereign identities. It's still early days. My view is that banks would have taken a position of wait and watch. There are many startups, many blockchain companies potentially like yourself looking at this space around digital identity. We have our own R&D team, and we are looking at this topic very closely. In fact, in the next 6 months or 9 months, we are going to launch some services around this. We already have a product team working on it. But to be honest, in the context of financial services, this is fairly new. There are banks in Europe who are experimenting with this in early days, but there are many barriers to adoption, if I can use that word. So I think still early days, but very exciting. To your point around tokenization and why tokenization, again, there have been papers written on it, so I will not talk about the most obvious things around cost efficiencies and increasing the investor base and democratizing financial services, reducing the ticket size. More importantly for me, I think if this space has to evolve, the biggest missing piece right now is around liquidity. I remember when I was in a bank about 7 years ago, my last project with that bank was we actually issue a tokenized corporate bond way back in 2016. So tokenization is not a new concept. The European bank I was part of was the first bank to do this project. And there were many other projects running back then, but they never saw the day of the light because there were many missing pieces. There were no scaling solutions. There was no liquidity. More importantly, the exchanges or the FMIs were missing in action. That is now changing this time around. We are seeing many layer 2 or scaling solutions, infrastructure providers like Fireblocks, helping banks and other institutions, making it easier to do it. But most importantly, we are seeing the large FMIs, exchanges, CCPs, custodians coming in and taking part in this ecosystem. And that makes banks very comfortable with doing this at scale. But you're right, when you start combining that with digital identity, that creates a beautiful flywheel effect. For now, the approach the banks are taking is instead of looking at a self-sovereign identity or an on-chain identity, they are looking to embed KYC logic into some sort of a wrapper smart contract, and then using that as a form of identity. But yeah, we'll see how the space evolves. But I would like to understand, what are your views on this space? I would assume you have done some work in this space. What are your thoughts around tokenization, identity? Yeah,
I mean, from our perspective, financial services, we always saw digital identity as sort of the key entry point for a business, and to be able to hook the user to come into your sort of product and then be able to then use adequate analytics to then sort of scale more and more into products. What we were looking at was customer onboarding first of all, and sort of making that as seamless as possible. But the challenge always remains getting all the banks on board to have a sort of single system. But then also being able to use that to offer them services like wealth management or digital assets, etc., depending on how the regulations would provide. So it would become more like a one-stop shop where users are not only able to engage and create a kind of sort of affection towards their bank, which is something that's not very commonly known in today's day and age, right? But also to incentivize them on their behaviors, right? So to be able to bring in then the decentralized world and connect it with a loyalty sort of scheme, right? And that was sort of the end goal that we were looking at from a retail perspective. From a business banking perspective, we were always looking at it more from the perspective of helping the businesses not only attain easier sort of lending capabilities, but also cheaper lending capabilities, right? And the problem always comes in when you're not able to pay back, and then you call the bank and you're like, no, give me 5 more days, or give me 10 more days, or don't take my collateral. I think smart contracts really eliminate that from the game, right? And that would make everything a lot more easier. It's easier for the banks as well. You don't need your big recovery teams and this and that, right? So I think that's sort of more the area that we were focusing on. Yeah.
Fascinating. You use the word regulations, and in Dubai, you cannot have a panel discussion or a fireside chat without discussing about regulations. You talk about Dubai, the first thing that comes to mind is VARA, how forward-looking VARA has been. And yet, banks seem to be a little skeptical. They acknowledge the fact that VARA and FSRA in the ADGM have been very forward-looking in their approach, by far one of the most forward-looking regulators globally. And yet, they are skeptical about the UAE Central Bank, or ESCA for that matter. Given you have spent years in this part of the world, what are the gaps? What is the concern? And is there a gap, or is it just perception?
Look, the Central Bank of UAE has a much larger responsibility than a certain segment of the business, right? The UAE has its own compliance, etc., that they have been working very hard on improving, right? And the central bank always takes a very conservative role. That being said, we have interacted with CBUAE on a lot of these fronts, especially with being able to bring digital assets in. And they have an innovation arm. That innovation arm is working day and night to come up with solutions. I think when sort of the exchanges started coming into the UAE, especially the crypto exchanges, CBUAE very quickly came out with a certain, at least broad kind of guideline that, okay, this is at bare minimum what you need to meet before a bank can onboard you. So I think it's more just a case of getting all the regulators on the same sort of path, but the overall responsibility always remains with ESCA and CBUAE. From VARA's perspective, we've had nothing but extremely positive interactions. They've been very supportive throughout the whole process of our application, working with us through each case individually, giving us clarifications where we're required. And we've actually been able to contribute a lot as well into sort of the rule books and all the development that's happening. And even now, they engage constantly with all the license holders or people who are in the process of getting a license to be able to continually evolve the space. So you will see more and more sort of improvement towards the rule books and clarity on regulations that's required. So it's all very, very positive at this point.
Fantastic. Yeah, I live in Singapore, but MAS in Singapore also have been very forward-looking. But we always read and hear about what's happening in the UAE, and no wonder that there's so much action happening, because it is coming from the top.
Yeah, so we're originally a Singapore headquartered company, right? And we came here exactly for this reason because we were not able to get regulated in Singapore. And we came here for the sole reason that we want to get regulated and we want to make sure that our wallet holders, customers are protected and everything is done in a fit and proper way. So it's been, I think, a very, very good decision, but also, it's something that's been very positive. So I think one other thing which is very sort of thematic here in the region is, of course, remittance and cross-border payments, right? Because this is a region where there are a lot of expats who are working and, sort of people that send money to their home countries, etc. as well. And we do see Web3 and, the decentralized world coming into play a very critical role there. I know a lot of the banks are working with the likes of JP Morgan, etc., to build these payment rails on chain. I wanted to hear from you what your thoughts and sort of feedback towards that was.
Yeah, so at Fireblocks, we are very bullish on payments as a use case for digital assets. In fact, about 2 years ago, we acquired a company called First Digital. They are now a very integral part of Fireblocks, and we are working on a bunch of very exciting use cases. The first use case is what we call a payouts use case or a merchant settlement use case. And for that, we have partnered with some of the biggest names on the planet, including Checkout.com, WorldPay. They are our customers. And what they are doing is enabling merchants to settle in stablecoins. Well, that's the first use case. The second use case is what we call a pay-in use case, where you would have heard the news about Ferrari accepting crypto as a form of payments. And increasingly, I think in this part of the world, that theme will become much stronger. So we are getting a lot of requests from PSPs who want to enable their end customers to pay using their crypto balances. On the third front, it's cross-border payments, obviously. And in that, we are working on two themes. The first theme is the classic on-ramp, off-ramping model. For people who are aware, that's very similar to the Ripple product. But we are asset agnostic, so our customers can use any stablecoin or any crypto as a bridge to connect two different fiats. That's the most obvious use case. So basically, the way it works is, let's say you are a PSP in UAE, you on-ramp your fiat into a crypto exchange in UAE. The crypto exchange then sends that stablecoin to, let's say, Philippines or Thailand or Indonesia. The off-ramp there will convert the crypto back into fiat, and then you do the last mile delivery. So we are working on a couple of corridors, in fact, 4 corridors: Singapore, Thailand, Mexico, US, UAE, Philippines are some of the biggest corridors we are working on. The other theme within cross-border payments, which I am very excited about, is the use of permission DeFi. So how do you combine stable coins with permission DeFi to create on-demand liquidity, right? So you get rid of the pre-funding concept, you get rid of the CeFi exchanges in the middle, and then bring in a permission DeFi pool or AMMs, automated market makers, to do interbank wholesale FX between two banks. We are working with a couple of consulting companies, a couple of blockchain protocols on creating those permission pools and then doing experimentation around that. Parallelly, we recently acquired a tokenization provider based out of Australia. They were also working with the BIS and 3 central banks on a project called Project Mariana, where the central banks are working on creating permission pools for CBDCs in the context of cross-border payments. So I think the possibilities are immense in this space. Again, a very new space. But if this takes off, it will create a whole new way of doing cross-border payments. So then that topic is very close to heart. So we are doing a couple of reports and white papers which are due to be released in the next couple of weeks. So we'll definitely share that with the ecosystem once that is released.
Wonderful. I think there's 2 things that a remitter is always looking for, right? Is my money needs to get home fast and it needs to be cheap. So if these are 2 problems that can be solved through this, then I don't see a reason why adoption should not, go mass.
Absolutely, and I think to be very honest with you, and I was having a discussion with a PSP customer of ours. Remittance is a low margin business, and in a high liquid or a high volume corridor like UAE India or UAE Philippines, these are mature rails. So there is less room for on the margin play. But I think where it becomes more interesting is the pre-funding concept, right? Because for these guys to enable cross-border payments, they have to pre-fund across Nostro accounts or in other sort of setups. And that to me is the real play, where from a PSP perspective or from a bank's perspective, you can get rid of the trapped liquidity. And the third most important part is around the low value payments. So today, for example, if I am a Filipino blue-collar worker working in Dubai, if I want to send $100 or like 1,000 dirhams, sure. But can I send 5 dirhams to my family? That is very difficult to do using normal rails. And I think in the context of blockchain, that is very easy. You can actually do high frequency, low ticket size payments very seamlessly and at a very cheap rate, of course, depending on the blockchain that you are using.
Fantastic. So one other important aspect of sort of banking and finance per se is wealth management, right?
Sorry?
Wealth management.
Yes.
And we really do understand, sort of the amount of intermediaries that partake in a particular wealth management transaction, all the way from an investor's account to the broker's account and, through the sort of clearing and settlement process and going in, right? So how do you see from a Web3 perspective or from a decentralized world perspective this coming in and sort of disrupting the existing, wealth management business model?
So to be very honest, we have not seen, okay, so there are two themes that we have seen on the wealth management side. The first theme is where some of the traditional wealth managers want to offer crypto as an investment product to their end customers. So I bank with some robo-advisor and then I say, okay, you know what, I want some exposure into Bitcoin. So that's the low-hanging fruit. But the other theme that I'm very excited about is around tokenization. Now, let's say you are a large PE firm in the US. Now, historically, if you have to invest in a PE fund, you have to be a multimillionaire. The ticket size would historically be in tens of millions of dollars, if not hundreds of millions of dollars. But now with tokenization, they could fractionalize it, they could tokenize the fund, and then use the distributors in Dubai or Philippines or India, reduce the ticket size, and then even an average Joe on the street can buy $100 worth of a tokenized KKR fund or a tokenized Blackstone fund. And that is where if you're a wealth manager, that creates a whole new set of possibilities where you can provide some very exciting products to your end customer. And you can give them an exposure into exotic investment products. So we at Fireblocks, again, as I said, we are the foundation layer, which is custody, and then people can build services on top of that. So we are talking to, our vision is that on the one hand, we have the issuers who are tokenizing on our platform, and then we can connect them with distributors on our platform, the large fintechs, the exchanges, and then again, that creates a beautiful flywheel effect.
I recently met a project based out of India, actually, which was issuing tokenized bonds for solar power, right? And they're literally like crowdsourcing it. It's so community focused. You get, the community involved. People can invest, I don't know, 100 rupees or 1,000 rupees. They make a return, but they're also doing good at the same time, right?
Absolutely, and I think I know we are almost out of time, but carbon credits or ESG is the other theme, right? So you can get exposure into tokenized carbon credits or tokenized green bonds. And again, it's a whole different topic which will need one more fireside chat. But that again is a very interesting theme that we are looking at.
So that's our new launchpad, right? The Impact Launchpad that we're building.
Which is at what? In 15 minutes from now? That's 4 p.m., right?
Exactly.
So all of you should go and attend the Launchpad event.
Absolutely. So that's exactly what we're trying to tackle with that as well. We're not only trying to bring, the community and sort of mass investing into sustainability, but also help projects use carbon credits from all the good work that they're doing in the impact space and issue asset-backed tokens against it, right? And we feel like this is the best way to sort of give back to the world, right?
Should be talking then.
Absolutely. So I think just to conclude, maybe how do you see sort of things evolving in the next 2 or 3 years, in terms of adoption and, particularly on the institutional side, more importantly?
Yeah, look, there is no doubt in my mind this UAE and probably the broader MENA region will become the hotbed or the global hub for innovation and digital assets, triggering from a pent-up demand and very forward-looking regulators. I think more and more we haven't seen the big boys in UAE jump onto the bandwagon, but I can tell you in the next 12 months, they'll all be participating in some shape or form. And that will make the ecosystem even more stronger. You will have, again, as I said earlier, tokenized money, tokenized assets. We will have market makers, exchanges making markets in those tokenized assets. Payments obviously is a low-hanging fruit. We'll see more and more PSPs offering very interesting products around payments. And all in all, this will be the classic, a very interesting and strong ecosystem for Web3 companies to thrive. And again, given that, we are betting big on this region as Fireblocks. We are expanding, we are hiring more resources, and we are going all in on this region.
Wonderful. I think for us as well, being here at the Future Blockchain Summit has been a phenomenal experience. We see a lot of energy, a lot of excitement in what is happening in the blockchain and the Web3 space. And we're really looking forward to launching our Impact Launchpad here as well and be able to then scale it. That's all from us. Thank you very much for your time, and it was an absolute pleasure to have you here.
Thank you.